Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of Proprietary Price, Pattern, and Time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get started here. Markets, again, a light volume day, but we do have some action today. We had a nice, strong gap higher this morning, but again, very quickly we saw it degrade and just come right back in. And essentially, we came all the way down to gap fill, and that was the low of the day. And you can see it clearly here if I draw a trend line from the close yesterday right across. Look at that perfect little gap fill right to that low on the chart. And again, this is why we want to use the technicals in the chart, because they tell us to be long or short or to buy or go short at specific levels. And sure enough, as the market was falling here into gap fill, you would have recognized that as a possible long opportunity. Sure enough, from that point on, the markets have gone into float mode. Please note the volume, how it's died out since that point in the mid-afternoon session here. And again, the markets have floated back up. We're not at the highs of the day, but we're pretty close. Overall, pretty close. Now, there are a couple stocks in play. One of the reasons why the markets had a strong open this morning was partially based off the ECB. You had Draghi at the ECB coming out with some positive statements on Europe, but also we saw some news out of Apple. Now, Apple gapped higher today after an ugly sell-off late in the day on the back of Tim Cook meeting with China Mobile. All right, now the interesting factor here is that no sooner did the stock gap up, and we can go to it right now, but then it collapsed right back down. And again, the key here is to recognize that really the only news piece that seems to have enough impact for Apple to change direction dramatically and sustain itself would be earnings. And earnings are a couple weeks away. So really everything I'm seeing here, folks, especially considering it couldn't hold today's gains on the gap up, it tells me that Apple will go lower. All right, in the short term, Apple will go lower until earnings. Once earnings come, you never know. At that point, we could see Apple making a dramatic move higher if earnings are good, or a big move lower if they're bad. But again, please notice the strength here and the signals. The chart tells you everything. Here's a strong gap up, and it failed all the way back down, and now we're hovering at yesterday's lows. I can draw a trend line in here, and you can see we have not closed below yesterday's lows. So as a shorting opportunity for later this afternoon, if you get any close below this pivot low from yesterday, which was at the 115.99 level, I believe, if that's correct. Yep, 115.99. You could actually go short Apple for a couple dollars to the downside. It could trade as low over the next day or so to about the 505, 506 level, which will be a big level. But right now, anyways, that's what you're watching, that pivot line. And again, these pivot lines are important. As you learn the methodology here at InTheMoneyStocks.com, you start to become an expert at drawing these in and understanding, well, if the stock closes here, what does it mean? If it closes below that line, what does it mean? And ultimately, how do you trade it and make money off of it? So again, that's a pivot line, and again, the level's about 516. A close on the 10-minute chart here below 516 would set off some continued selling. And we could do this in this candle for all I know here as we come into the 2:30 p.m. time frame on this January 10th, Thursday, 2013. All right, so that's what we have going on there on Apple. Let's take a look at a couple other stocks. BIDU, a Chinese play here, is continuing to be a rocket ship. Unbelievably strong move here on BIDU. The key level on BIDU, for those of you at home following the charts, is this gap fill. I doubt it'll get there today. That gap fill would be at 114 approximately, still about $3.50 away. But it is possible, definitely is possible to see that hit at some point in the next day or so. That will be resistance as a day trade, and again, if it pierces that level and hits the 200 as a swing trade, it will be a shorting opportunity. Okay, so nice little setup right there going into the next few days. A couple other stocks to watch, Goldman Sachs and JPM. Let's take a look at JP Morgan. JP Morgan continues to grind higher here. Had a kind of a flat reversal day yesterday, but it's doing all right today. The reversal yesterday came ahead of the ECB. A little bit of worry ahead of that comment from Draghi, but overall it turned out to be fine. So JPM is continuing to grind higher here. Okay? Goldman Sachs is trading up slightly on the day. It's actually having a pretty solid move here. The high today on Goldman Sachs was 137 198, up about $3.50, and it's just off those highs right now. I have a key level on Goldman Sachs around the 140 level, so just be aware. Could be hit as early as tomorrow. I mean, the way this thing is going, a dramatic increase in Goldman Sachs. JPM is strong as well. And again, if you look at the Goldman Sachs daily, look at the run it's had since really the beginning of December. I mean, here's December, right? And here it was hovering around the 115 level. It's now trading at 137. So you're talking about $20 plus move, which is about 20%, just under 20% move in Goldman Sachs in the last 1 month period or so, 1.5 months. All right, so that's what we have going on with Goldman. Amazon selling off a little bit. I talked to you guys about this last week when Amazon got upgraded, folks, and had that big move. And then we saw essentially what we saw is the parallels drawn in the video. I talked to you guys about this, saying how Apple was upgraded at its highs at 700, and look what happened to Apple. Same thing with Amazon. All right, Amazon was upgraded, had a big pop that one day. That's been it. The high from that day has been it. Since then, the stock has fallen back down. Now, who knows where it goes, depending on where the market goes in the short term, but I don't think there's much more upside. Earnings will be out later this month as well, which could be intriguing on Amazon. IBM has been one of the weaker stocks over the last 1 week period, even with the markets kind of chopping sideways for the most part. You can see here IBM has sold off really since last Friday down into the 50 MA. The key to watch on IBM is this trend line right here. Let me draw that in for you guys. Here, let me go here. Get it exact as possible. And there you go. So you haven't hit it yet. You kissed it right here today, but you're very close. And this trend line, if this breaks, you're going all the way down to this pivot low. So that's another interesting factor to watch. Okay? So I've set you guys up with some keys here going into the next few days on things to watch. You have day trade levels, you have swing trade levels, and bottom line is just pay attention to the charts, read the charts. What you need to do is come to InTheMoneyStocks.com and learn the proprietary techniques that we teach here. All right, they're secret. Essentially, no institutions use them. We've developed them here. They work with an 80 to 90% success rate. And ultimately, we'll teach them to you as you join our services and learn the methodology. You will profit for life. Take the 7-day free trial to the Research Center, 7-day free trial to the Intraday Stock Chat. Research Center is geared towards swing traders and investors, while the Intraday Stock Chat is geared towards day traders. Take care, guys. Have a great afternoon.